start today's session. Yesterday we discussed about everything about the C corporation. C corporation, how is it taxed? And about first we discussed about your schedule M1 and M3. Under M1 you report your reconciliation of book to taxable income, and we discussed about how is the reconciliation is done. You start with your book income, then you have certain differences which may be permanent and temporary that needs to be adjusted to get your taxable income. Next, we discussed about how is the taxation of C corporation is calculated. So you have your gross income less your ordinary deduction and your charitable deductions. Then you get your income before special deduction. There are some special deduction given to your C corporation like your DRD and NOL, which we discussed yesterday. Okay, any doubt in C corporation taxation part?
No, ma'am.
Okay, so let's start S corporation. So what is S corporation? So basically when a corporation is formed is by default a C corporation. But if you want it to be a S corporation, there is some eligibility required. S corporation is a tax election under subchapters S of IRC that allow a corporation to be treated as pass-through entity for the tax purposes. So S corporation are considered as the flow-through entities or a pass-through entities. That means they do not pay the taxes at the entity level. Whatever the income they are earning, that is flows to their shareholders' individual tax return. So this avoids the double taxation. That means income is only taxed at the shareholder level, at the individual level. Okay. So as I discussed, it is a flow-through entity. It has a pass-through taxation, means no taxation at the corporate level. Whatever the income they are earning or losses will be reported on the Form 1040 of their shareholders. They have limited liability similar to a C corporation, and S corporation have to file their Form 1120S in which they report their income and losses. But yes, tax they do not pay any tax at the entity level. Income retain its character when it is passed through. It means if there is an income that is ordinary, it will be ordinary on the individual tax return also. If it is a capital gain, then it will be a capital gain when you flow through this income. Okay, that means the nature remains the same. Okay, there are certain eligibility requirement that is required for a corporation to be a S corp. So first is domestic corporation. That means to be a corporation, to be considered as S corporation, it should be a domestic corporation, like should be incorporated in any state of the US. Only allowable shareholders means the shareholders can be individual and certain estate and trust. Okay, partnership C corporation are usually not allowed to be a shareholder under C corporation. No non-resident alien shareholders. That means shareholder should be the US citizen. They should not be the foreign individuals. Maximum 100 shareholders are allowed. If the shareholder exceed more than 100, then it will not be considered as a S corporation. Next is only one class of stock is allowed. It means there should be only one class of stock. Both common and preferred stock will not be allowed. Only a single class of stock is allowed. Okay. Any doubt till here?
No,
No,
good.
ma'am.
Next is making the S corporation election. So if you want your entity to be considered a S corp, you have to file the election by using the form 2553, it must be filed by March 15. Like if you want for this year, like to be considered as corp, then you have to file this form by the March 15. And all shareholder, that means 100% of the consent is should be there. Okay. So all shareholders must consent for a corporation to be elected as S corporation. If you are filing after March 15, then the S corporation will be applicable in the from the January 1 of next year. But if you are filing within March 15 of this year, then this year you can consider it as S corp. Late election may be allowed, but with a reasonable cause. As I told you, if you are electing after March 15, then for the next year, it will be considered as your S corp. Next is advantages of S corporation. So basically, S corporation's advantages are that they avoid the double taxation. As in case of C corporation, the corporation pays the taxes at entity level as well as the shareholder level. But in case of S corporation, they do not pay the taxes at entity level. That means they avoid the double taxation. Whatever the losses they have, it can be passed through their shareholders, individual return, and can be offset against the other income. Distribution generally tax free to extent of stock basis. So since whatever the income you are earning, you already pass through the shareholder. That means if you are giving them distribution, it will be considered as tax free up to the extent of your stock basis. Certain limitations are also there, that they have strict eligibility rules. That means if you are not able to fulfill any of the criteria, that means your S corporation status will be terminated. Losses can pass through and offset shareholders' other income. Fringe benefits greater than 2% shareholder, not fully deductible. So, in case of C corporation, you can deduct your expenses for the fringe benefit, whatever you are giving to your employees. But in case of S corporation, if the fringe benefit is more than 2% of shareholders, then they will not be deductible. Built-in gain tax may apply to former C corporation. So built-in gain tax means, like if your S corporation was C corporation in the past and you have certain gains, like when you convert C to S corporation, if you have certain gains, then there will be a built-in gain tax applicable. Okay, that means your S corporation have to pay these taxes. Otherwise, S corporation do not pay any taxes at the entity level, but in case of built-in gain, they have to pay the taxes. Okay. Next, if we talk about an example, okay, one more thing, that S corporation have to file the form 1120S, okay, to show their all the income and losses they are earning. Next, this income will be passed through to their shareholders through the schedule given. Okay, first schedule K is filed, which show all the separately and non-separately stated items for a whole S corporation. And then for each individual shareholder, schedule K1 is filed. Okay. If you have 10 shareholder, then you have to file 10 schedule K1. One is for each shareholder. Then this K1, your income and separately stated item will flow to the individual return of a shareholder. So this is the flow of the income from an entity level to the individual level. Okay. Any doubt till here?
No, ma'am.
No, ma'am.
Okay. So an example is given that ABC has ordinary business income of $150,000 and there is a shareholder who owns 50%. Okay. So since the corporation has this income and they do not pay the taxes at the entity level, that means this income will be flows to the shareholders tax return on the basis of the percentage they are owning. So if Sam is owns 50% of the shares of S corporation, that means 50% of this income will be reported on his form 1040. Okay. So if these S corporation have certain other income, like they have capital gains, they have their dividend income, capital gain of $100, that means this 50% of this 100 will also flows to the Sam's tax return. So he will have capital gain of $50. Okay, so whichever is income, whether it is separately stated or non-separately stated, it will be flows to the individual tax return based on their percentage of ownership. Clear? Next, eligibility criteria is again given in some detail. First is eligible entity type. As I told you that only individual and certain trusts are allowed to be a part of S corporation. To qualify as S corporation, the entity must be a domestic, first of all. It should be incorporated in the US, and an eligible entity such as C corporation or LLC electing corporation status. Ineligible entities include bank using reserve method, insurance companies, and DIS. Shareholder eligibility requirement: if all the shareholders should be a resident of US. Okay, for individual shareholder, certain estate and trust can also be a part of S corporation, like ESBT, QSST, granted trust, but a C corporation, partnership, LLCs, they are not allowed to be a part of CS corporation. Shareholder should be up to 100 in number. If you have excess of shareholder, then it will not consider as S corporation. If some of the shareholders are belongs to a same family, then family members may be elected to be counted as the one shareholder. Okay, like if 10 family members are there in S corporation, then this 10 family member will be counted as one shareholder. Okay, there should be one class of stock, like only common stock is allowed. Preferred stock or special profit and loss allocations are not allowed. Filing status requirement, like to be elected as S corporation, you have to file the form 2553, and all the shareholder must agree to this form. There should be 100% of consent to be available to be considered as a S corporation. Event terminating eligibility. Okay, so these were the event that leads to the eligibility of the S corporation. But if you are not able to complete these eligibility, or you are anytime like you become ineligible, that means your S corporation status will be terminated. For example, if you have more than of 100 shareholders, if you issue two types of stock, two classes of stock, if a foreign corporation becomes a part of your S corporation, in that case your S corporation status will be terminated. Okay. Also, if you have your passive income more than 25% in the last 3 years, then also your S corporation status will be terminated. Okay. Also, you can terminate S corporation status by yourself also. Just like for electing S corporation status, you conducted an election which required the consent of all shareholders. Similarly, to terminate the S corporation status, you can file the elections, and you should have now majority of consent. Okay, not 100%, but majority of consent will be allowed. So is it clear about the termination of S corporation?
Yes, ma'am.
One more thing, like if the S corporation status is terminated due to ineligibility. Ineligibility means these conditions you are failed to meet. In that case, your status will be terminated immediately. Okay. If you are conducting an election, that means it will depend upon the date of election. Like if you have conducted by March 15, then for that year your status will be terminated. But if you have conducted after March 15, then from the next year. Similarly, if your status is terminated due to passive income eligibility, like you have your passive income more than 25% in last 3 years, then from the fourth year your S corporation status will be terminated. Fourth year, okay, from January 1 of fourth year your status will be terminated. Is it clear or any doubt?
Yes, ma'am.
Clear, ma'am.
Clear?
Yes, clear.
Okay, so election we already discussed that to be elected as S corporation you have to file the election by filing the form 2553, and all shareholders should be agree. That means you should have 100% of consent from your shareholders. 255 requirement, file to elect the S corporation status must be signed by all shareholders and must include corporation name, address, AIN, fiscal year, shareholder consent statement. Filing deadlines, we already discussed that if you file by March 15, then for that year you can treat your corporation as S corporation. But if you are filing after March 15, then for the next year your corporation will be treated as S corp. Okay. Effectiveness of S corporation S election. The election generally remain in effect until it is voluntary terminated or terminated due to disqualifying event. Okay. So your corporation will be treated as S corp as until you have voluntary, like up to if you sorry, your corporation will be treated as the S corporation unless or until you yourself elect to be treated as other corporation, or your status is terminated due to some eligibility. Otherwise, like there is no condition ki you have to be S corporation for this year only. So if you want to revoke your status, as I told you, you can again do the election, but in this case, you only require more than 50% of the consent, not 100%. One more thing, like if you have terminated your S corporation status, then to re-elect the S corporation status, there is a time limit of 5 years. If you have terminate your S corporation status, that means after 5 years only you can again re-elect the S corp status. Okay, so there should be a 5-year gap between the re-election. Clear? So S corporation termination we already discussed. You can voluntary terminate. Like जैसे आपने election कराए थे, you can now do the same election, but now it is require more than 50% of the consent. Effective date of voluntary termination, like if you have filed the election by 15th day of third month, means March 15, then it will be applicable for that year. But if you have filed after that date, that means your termination will be applicable from the next year. Also, you can choose a date by yourself also. Involuntary termination means termination is due to some ineligibility. Okay. So if the termination is due to ineligibility, that means the status will be terminated immediately. Similarly, for passive income test, if you fail to meet the passive income test, then from the fourth year onward, your corporation as corporation's status will be terminated. Okay. Re-election, I already told you that you have to wait 5 years before the re-election. Any doubt in termination and election of S corporation?
No, Garima.
Okay. So next is S corporation income and losses. So S corporation, they are flow through entities. Whatever the income, deductions, credit, losses corporation is earning, they will flow to the shareholders and reported in their individual tax return. Okay, they are form 1040 and in schedule E. S corporation do not pay the taxes at their entity level. First, 1120S is filed for S corporation, then schedule K1 is filed for each individual shareholders to report their percentage of income, separately stated item, their credits, deductions, distributions. So we have some ordinary income item and some separately stated item. Ordinary income is whatever the income of an S corporation from its ordinary business. Separately stated item means which have a special treatment on the individual tax returns like capital gain and losses, Section 179 deductions, charitable contributions. Please remember you have certain limits on these items. That is why they are reported as separately stated items. Tax exempt income, passive income, foreign taxes, dividend and interest income, annual. Whereas your ordinary income or loss is from your operations of a S corporation. Okay. So how you can allocate this income to your shareholder? It is basically the percentage of ownership, and moreover it is allocated on per share per day basis, because there may be chances that some of the shareholders have in between acquired some of the additional ownership, like they are owning of 10% for the 6 month, and then after 6 months they have purchased more shares and now owns the 20%. So how will you allocate the income now? So that means your income and losses will be allocated on per share and per day basis. Clear? Is it clear?
Yes, ma'am.
Okay, next is loss limitation for shareholders. So since we already discussed this about the loss limitations for shareholders, that if you have any losses from your flow through entities, that losses will be flowed to your individual return. So can you deduct all the losses from your other income? The answer is no. You have to subject to certain kind of limitations that are cost the loss limitations. Okay. So first limitation is your stock basis. Next is your tax basis, stock basis and debt basis. This is your tax basis. Then you have to subject to at risk basis limitation, then passive income limitation, and then your business income limitation. Okay. So this stock basis, debt basis, these are collectively called your tax basis. So if you have certain loss from your S corporation, then how much loss you can flow to your individual return, it will depend on your tax basis. So up to tax basis, you can reduce your losses from your other income, and excess of losses you can carry forward. Then the limitation is applicable is risk basis limitation. It means whatever you have amount in your at risk basis, only up to that amount you can deduct your losses, and excess of losses you need to carry forward to the next year. So these are certain limitations which is applicable first at the first at your S corporation level. Okay, it will depend upon the ownership, your basis in the S corporation. Next, after these limitation, next limitation will be applicable is your passive income limitation. That means you can reduce your passive losses up to the amount of passive income, and excess you need to carry forward. Passive loss limitation. So there is some limitation for your losses to be deducted from your individual return. Okay, you can't deduct your all the losses from your flow through entities from other types of income. You have to subject to certain limitations, which is tax basis limitation, then at risk basis limitation, then your passive loss limitation. Okay, is it clear?
Yes, ma'am.
Next is treatment of distribution. So if a S corporation is distributing to their shareholders, their distribution will be tax free, because you already pay the taxes on the income an S corporation is earning. Okay, so now if you are getting actual distribution from your S corporation, that means it will be tax free up to the amount of your stock basis. Okay, if you have excess of distribution, then that distribution will be treated as a capital gain for you. Clear? So for example, S corporation has a business income of $300,000 and there are three equal shareholders. That means this income will be allocated to three shareholders. That means $100,000 for each shareholder. So it will be for each shareholder, it will be $100,000 on their individual tax return. Okay. If we talk about some example related to suspended losses. For example, you are a shareholder of an S corporation, like you have 100% of ownership and your stock basis is 10,000. The S corp allocate her a loss of $25,000. So you have your stock basis in S corporation is 10,000, and in the year you have the loss in S corporation which is 25,000, and since you are 100% shareholder, that means whole amount of loss will be flows to your return. Okay, so as I told you that whole amount of loss will not be deducted, it will subject to certain limitations. So first is at tax basis limitation. So since you do not have any debt basis here, it means your stock basis will be equal to your at tax basis. So your tax basis is $10,000. That means you can deduct up to the amount of $10,000 loss, and excess 15,000 you have to carry forward. Okay. So this is example related to only one limitation. You have been asked that your at risk basis is now, suppose you have at risk basis of $8,000 and next your passive income of $5,000. So how much loss you can deduct and how much you need to carry forward? Okay. So let us consider this example. Suppose you have your tax basis, which is given $10,000, and suppose your at risk basis is 8,000 and your passive income is 5,000. So how much this loss you can deduct in your form 1040? It will subject to this limitation. So first is tax basis limitation. It says that you can deduct up to 10,000 and rest of the loss, which is 15,000, you need to carry forward. Okay. So here you carry forward your $15,000 of losses. Next, you come to this filtration at risk basis. It says that you can only deduct 8,000 and rest you need to carry forward. That means this 10,000 is now reduced to your 8,000. You can only deduct your 8,000 losses and rest you need to carry forward. Okay. Next, this limitation is now subject to passive income test, which says that you can deduct your losses up to the passive income. So that means this 8,000 is now deducted only 5,000 and rest $3,000 you need to carry forward. So if we talk about this last value, that means you can only deduct up to $5,000 of losses from your individual tax return. Okay, rest these will be carry forward, which is 15 plus 2 plus 3. It will give you 20,000. This 20,000 will be carry forward. Any doubt? It will come in more detail in your TCP section. Any doubt?
No, ma'am.
Is it clear? In TCP, you have been asked some simulation also on this topic. Okay, it is given in detail here. So first, if we talk about stock basis, debt basis, what are these? So firstly, stock basis is the shareholder investment in the corporation. Like whatever you are contributing to this as corporation, if you have some additional contributions or if you have certain additional shares you are purchasing within the year, if your share of income, all income, ordinary business income, your separately stated items, so this all will add to your stock basis. Okay. And if you have any distribution, if you have any losses, any separately stated deductions, non-deductible expenses, all these will distribute your will decrease your stock basis. So this is how a stock basis is calculated. So you need to add your contribution, your income, which income, the percentage of income you are getting from the S corporation. Whether it is a taxable or non-taxable, whether it is ordinary or separately stated, if you have made any additional contribution, that is also add to your stock basis. But if you have certain distribution, losses, deductions, non-deductible expenses, it will reduce your stock basis. Okay, so this is how you got your stock basis. Is it clear?
Yes, ma'am.
Next is your depth basis. So depth basis is basically represent that how much shareholder lend money directly to the S corporation. Okay. It basically represent how much a loan S corporation has taken from the shareholders. Okay. Guaranteeing a loan does not create debt basis unless the shareholder actually pays the lender. Please remember, like if a shareholder is guaranteeing some loan on behalf of the S corporation, then that loan will not add to your debt basis. Only the loan, only the amount you have given to this S corporation. Okay. because you do not have any liability for the S corporation. You are a limit, you have limited liability in case of S corporation. Okay, so your debt basis will represent the amount only you have given to the S corporation. Okay, so stock basis and debt basis will add up to give you the tax basis, which I discussed above. So stock basis plus your debt basis will give you the tax basis. Okay, so in when you decrease your losses in tax basis, so first you reduce your stock basis first. Okay, you reduce your stock basis first, then you reduce your debt basis. Okay, and excess of the loss you can carry forward to the next year. And if in next year you have income, that means your basis will increase, then which basis you will first increase, your debt basis or stock basis? The answer is you have to increase your debt basis first, and then you increase your stock basis. Okay, for example, suppose you have your stock basis of 10,000 and your debt basis of 5,000, and you have loss of 20,000. So as I told you that this loss will have to subject to these limitations. Tax basis limitation, which is stock basis plus debt basis. That means you can deduct only $15,000 of loss, and rest of the loss you need to carry forward. Okay, so how this loss is allocated? So first you reduce your tax stock basis, then you reduce your debt basis. So first you reduce your stock basis to 0, then your debt basis to 0, and if you have excess of the losses, you need to carry forward. Okay, so you need to carry forward your excess of $5,000 of loss. Up to this, it is clear or not?
Clear, ma'am.
Okay, so suppose now your stock basis becomes 0, your debt basis becomes 0, and you have suspended loss of 5,000. Talking about next year scenario. So if in the next year you have income of 12,000, so how will you allocate this income? So first of all, you will restore your debt basis. So you need to restore your first debt basis. So it will restore to the $5,000. Then you need to increase your stock basis, which is $7,000. Clear? Now your suspended losses, you can now reduce your suspended losses, which is deducted from your stock basis first and then from your debt basis. So that means it will be deducted from your stock basis, which give you your stock basis of $2,000. Is it clear now?
Yes, ma'am.
Okay. So now talking about the distribution from the S corporation. So for the S corporation, you have some account which is AAA, OAA, and AEP. So what are these accounts? So first is AAA. AAA is accumulated adjustment account. So it represents this S corporation level account that tracks cumulated amount of taxable income that have been previously taxed to the shareholders but not yet distributed. Okay, it represents all the income a S corporation is earning which is already taxed by the shareholders but have not distributed to them. It ensures that distribution are made tax free to the extent of AAA. So since this income is already taxed, so if you are distributing from this account to your shareholders, it will be considered as your tax-free distribution. Okay. What is the purpose of AAA? So it determines whether distribution are tax-free or taxable. It prevents the double taxation and helps track income or loss activity accumulated during the S Corp year. Key rules. So this AAA represent your income you already tax to the shareholder. That means your ordinary business income, your separately stated income items, your losses, non-deductible expenses, your distribution to the shareholders. Okay. So this is the AAA. You also have two more accounts, which is AEP. AEP is accumulated earning and profit. So these accounts basically represent your earnings and profit that were accumulated during the S corporation taxable year. So for example, your corporation was C corporation first. So now you have elected to the S corporation. So there may be chances that from the C corporation, when your corporation was C corporation, you have certain earnings and profits which you not have distributed to your shareholders. So it will be filled in, it will be comes in your AEP account. Okay, accumulated earning and profit. Next, you have your OAA account, which represent the other adjustment account. It basically represent the items which affect the shareholders basis but do not affect the AAA account. So there are certain items which are not included in AAA but included in your OAA account. Just like your tax exempt income and their related expenses only. So only certain items is included in your OAA account. So these are some account of your share S corporation. So if you have made any distribution to your shareholders, so it will depend where the distribution is coming. So first of all, if you have made distribution, it will reduce your AAA account. Okay. So first distribution is goes from your AAA. So since it is already taxed to your shareholder, so this distribution will be considered as a tax-free distribution. Okay. It only reduce your stock basis and will not be taxable. Is it clear? Next, if you are have excess of distributions like more than AAA, then that distribution will goes from your AEP account. Since this is the undistributed amount of C corporation, so it will be taxed to the shareholder and considered as a dividend income. Okay. So please remember, if you are a C corporation and you are making some distribution, then that distribution will be your dividend income to the shareholders up to the amount of accumulated earnings and profits. Next, if you have more distribution, then it will goes from your OAA account. Okay, if you have OAA account, it is also will tax-free distribution and reduce your stock basis only. Okay, so if the distribution is from AAA account, it is tax-free and reduce the stock basis. And if the distribution is from accumulated earning and profit, it will be taxable and as considered as dividend and do not affect your stock basis. Do not affect the stock basis. Okay. And you are making excess of distribution, like if it is going from OAA account, it will reduce again your stock basis and will be tax free. Okay. So next, if you have more than like these distribution, then it will be considered as a return of capital and reduce your stock basis up to zero, and excess of the distribution will be considered as your capital gain. Okay. So let's consider some example. Suppose you have your beginning AAA account balance $40,000. You have your ordinary income. So since this income will add to your AAA, your expenses will deduct to AAA and your distribution will also deduct your AAA account. So 40 plus 6, 46, and if you subtract the 5,000 expenses, it will give you the $41,000. Okay, so you have your balance in AAA is $41,000 and you are making the distribution of 50,000. So as I told you that this distribution first goes from your AAA account. So up to 41,000, it will be considered as tax free to your shareholder and reduce his stock basis to the reduce his stock basis. Okay, and if you are making more than AAA distribution, then it will depend, like if you have AEP account and OAA, then it will goes from that account. Okay, so here your 41,000 will be considered as your tax free distribution, and next year 9,000 will be considered as your taxable income. Any doubt? Any doubt?
No, ma'am.
No, ma'am.
Okay. So here stock basis was not given. So maybe you have some doubt that how much is taxable and how much reduce the stock basis. So let's take one more example. Suppose you have AAA balance of $45,000 and your stock basis is 30,000 and distribution is $40,000. Okay, so you are making a distribution of $45,000, sorry, $40,000, and your S corporation has a balance of $45,000 in AAA account. So this distribution first goes from your AAA account and will reduce your stock basis first. So up to 30,000, it will be considered as the tax-free distribution. Since you have excess of distribution more than your stock basis, that means excess of the stock basis, it will be considered as your capital gain. Okay. So let's take one more example. Suppose you have your AAA balance of $500. Your AEP balance of $300. Your net income for this year. Suppose you have this beginning balance, okay? And your net income for this year, let's take it $2,000. And suppose you have made distribution of $2,500 and you have the stock basis of shareholder. Stockholder share basis is $750. Okay. So can you calculate how much amount will be taxable, how much reduce the stock basis? I have given you the beginning balance, not the ending balance. Please remember. Should I solve it or are you able to solve?
Ma'am, solve it.
Okay. Since I have given you this beginning balance, not the ending balance, that means this, if this will have certain impact on these account. Okay. So AEP account is for the C corporation. Like if you are C corporation in the past, it means these will not have any effect on this account. But if you talk about the net income, since the net income will increase your AAA account, it means your ending balance will be 500 plus $1,000. It will give you $1,500 of the ending balance. First step is clear. Is it clear? If the ending balance was given, then there is no need to add the net income. That means it was already added to that account. Is it clear?
Yes, ma'am.
Okay. So now you are making the distribution of $2,500. Also, uh, let's take the stock basis also beginning balance. Okay. So if you consider this, uh, your stock basis is $750 at the beginning of the year. And since this is a S corporation, that means whatever the income you are earning, it will be flows to the individual. Okay. So since I have given you only stock basis of one individual, that means it is a sole owner of sole shareholder. So whole amount of income will be added to his stock basis. So his ending stock basis will become $1,750. So I have calculated the first ending balance of AAA and the stock basis. Okay. Now let's take the distribution. So the distribution is 2,500. So as I told you, this distribution first goes from your AAA account. So $1,500 of the distribution goes from your AAA account. This distribution will reduce your stock basis and will be considered as your non-taxable income. So your stock basis will be reduced by $1,500. Okay, and this $1,500 is your non-taxable income. Okay, non-taxable income. Next, then distribution goes from your AEP account. So 1,500 from your AAA, now it goes from your AEP account. So $300 is coming from your AEP account. That means it will be considered as your dividend income and will be taxable to you. Is it clear? So 1,500 plus 300, 1,800 goes from your AAA and AEP account. Now excess of distribution, which is 2,500 minus your 1,800, it will give you 700. So this 700 distribution first reduce your stock basis. So your stock basis is now $250. So 250 will reduce your stock basis first, which is considered as your tax-free return of capital. And next, after reducing your stock basis to zero, if you have excess of distribution, it will be considered as your capital gain. So 250, subtracting 250 from your 700, it will give you the 450. dollar as your capital gain. Should I repeat or is it clear? Is this example is clear?
Yes, Garima.
Is it clear to you all?
Yes.
So this is about how is the distribution is taxable to the shareholder. So first you have to check whether the beginning balance is given or the ending balance is given. If it is a beginning balance, then you need to do the adjustment like related to your income, your expenses. So if you have expenses in this case, then you need to reduce your expenses from your AAA account and from your stock basis. Okay. So first you calculate your ending stock basis and ending AAA balance. Then do the adjustment for distribution. So distribution first goes from your AAA account and it will reduce your stock basis and will be non-taxable. Next, distribution goes from your AEP account. It will be considered as dividend income for you and will be taxable. Next, if you have more distribution, then it will reduce your stock basis first. Like if you have any remaining stock basis, it will reduce it first. Then excess of the distribution will be considered as your capital gain. So if you have any doubt, you can ask. Our topic is finished. Your S corporation is completed.
Okay.
So we will do some questions in the next class. So please revise it.
So the next class, the questions will be on S corporation, correct? S and
SNC
C.
corporation.
Okay, okay, got it. Yep.
Okay, related to this video.
Yeah. Thank you. Bye bye.
Okay then, bye.
Thank you, ma'am. Bye.
Bye.